Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to a beautiful August 8th at the headquarters of Technical Trading and Investing. That is TFNN.com. As we always have a beautiful day out here between the 2 and 3 Eastern Time hour. We've got a market that tried to go down, tried to go up, and it's up 8 points today, 2.15 billion shares. So still don't have a lot of volume in here. We'll show some stuff later in the day, but I have a feeling that we have a bias to the downside over the next 45, 50 days, and I think I have at least some social proof. In the meantime, on this day in 1974, in an evening televised address, President Richard M. Nixon announces his intention to become the first president in American history to resign. The impeachment proceedings underway against him for his involvement in the Watergate affair. Nixon was finally bowing to pressure from the Republican Congress to leave the White House. Well, we've had several horrible presidents, and probably a lot of them should have been in jail. I think of a lot of people that really love FDR, but he put 120,000 people in concentration camps during the Second World War. Just because the courts say it's okay, we can always look back later and say that it was wrong. Nixon was just a long line of people that succumb to believing that they truly are a king. And I don't think anything substantially has changed over the years. All power corrupts totally. We see that today with the news that the IRS was using captured intercepts from the NSA to go after U.S. citizens and lying about it. Actually, the people that were lying about it were people in the Drug Administration Department. But kind of funny to see that it was right in the manual from the IRS. Kind of hard to believe that the fish doesn't rot from the head on this one. But just something to think about when we get someone as demonized as Richard Nixon. Not a great guy. Did he put 110,000 people in jail needlessly? No. But at the same time, ethically challenged. But we see lots of politicians continually to be ethically challenged. And it's probably sad we live in the land of the free, they say. But we'll talk more about that later in the show. Back to the market, already in progress, trading out at 1698, and it is, we went down to low as 1688, and what can we say about that? I mean, it tried to go down, it's tried to go up. We haven't really gotten a lot of volume either way. Probably the most interesting thing I think we'll probably see in the market is the reaction to gold. We did see the 1275 level, and it had a nice rally today, and I saw that some of the Denners hopped in on that early this morning. What can you say? We've got the pressure, at least on the dollar. Euro's doing a little bit better out here. But for the most part, we are now into the deep recesses of low volume and an option expiration cycle. We've got the options expiring a week from tomorrow, and I will get into the chart on that. But both the coming month in August and the month in September suggest that we will see lower prices, all a bit less low than I am forecasting, at least in my newsletters. I think we have a good opportunity to see some decent pullbacks, at least over the next 60 days, and at least what the option market makers are betting on. Other things around there, not a whole lot shaking in the market today, but we'll we'll get to that. Probably what everybody's talking about on financial infotainment TV shows today is Tesla. Tesla came out with earnings last night. They are up just shy, $22 right now, which is about 17%. We had a call, I think, was it on Wednesday? It was on Tuesday, on whether or not to buy puts on this, and I suspected that we probably wouldn't want to be buying puts before this. There is always the speculative episode, and probably the worst understood thing in economics. I always refer to John Kenneth Galbraith's A Short History of Financial Euphoria. But it's been Beanie Babies before. Sometimes the story's a little bit better. Sometimes there's a real company selling real things. But what we dig through after the brouhaha last night and all the swagger of the Tesla CEO is that if you go back and dig into it, Tesla's earnings didn't include lease accounting, certain non-cash items, and one-time charges of $16 million associated with the payoff of the DOE loan 9 years early. If it had, all these things would have reported a net loss of $31 million or 26 cents a share. Q2 revenues were $551 billion on a non-GAAP basis. But if you turn that into a GAAP, it's basically $405 million. So you can see that there's a wide stretch from what makes them look incredibly profitable at the moment to if we go to GAAP, which is generally accepted accounting principles, opposed to non-GAAP, which is I wipe my rear end with this. Whatever comes out is what I say it is. Mostly, when you get into these kind of GAAP accounting or non-GAAP accounting kind of things, we end up with the sock puppets of the .com era with, we're charging per click, but we really don't get any money per click, and suddenly all your money is gone. But what's divided out today, and what's say that you wanted to value the company. The company's the top of the line car sells for $79,000 a piece. Right now, it would be valued at $70. The company's valued that it is selling 25,000 cars. Each one would be about $72,000. So basically, they're looking at 100% profit for every car that it is making today is what the company is valued at. And the question is, how long will they be able to keep those? I heard the same kind of brouhaha when Apple was hitting 700. And I suspect we're probably within 14 days of a top in Tesla. I always like to use the 3-day rule, which is you want to look at these things for 3 days down the line. You want to see some kind of sign for a blow-off top, and you want to get one sign that the shorts are pretty much done beating their head against the wall and they've given up. That is normally incredibly light volume. Normally the bulls will keep pushing and pushing and pushing. When you see the extremely light volume, that is when there are no more shorts to squeeze. It is the bigger fool theory at work, and that is one bull trying to sell to another bull, sell to another bull. The volume almost always drops out at the top, and severely when the bears have gone away, and that's almost always a top in these companies that have questionable books and a questionable future. Normally, when you look into a business like this, you want to see that it has great barriers to entry, i.e. patents, everything else. Actually, there's no more barriers to entry for Tesla getting in new markets than the current car companies. We also see BMW coming along with their own new product. We talked about that earlier on Monday. Kind of interestingly enough, when the CEO of Tesla was asked about the new BMW product, he demeaned it and kind of laughed about it. I think that is a desperately horrible thing to do. You should always respect your competitors. They are like your enemies when you become complacent. It's normally when you get beaten up. I can remember the same kind of laughs that Apple had a short 2 years ago about Android in the phones. What we found out this week is that Android now, for the last quarter, had 80% of all new smartphones on the market that were sold. So pretty soon we're going to be looking at exactly what the PC market looked like about 1990, and that was that Apple was selling 1 unit for every 9 units of that were being sold with MS-DOS and Microsoft products, and eventually become irrelevant for the most part unless you are smart enough to come up with iPhones and iPads and iPods. You basically have to form a new market, and that is what is very tough to do in a market. You can't build a new car that's 12 feet wide. Of course, the roads are already there, bridges you can't go through. It's hard to build a car that's 2 feet wide. It's more of a motorcycle. There's a lot of things that have happened over 100 years, and coming into an entrenched marketplace is incredibly difficult. You have to give the CEO from Tesla a very good degree to get this far. He actually said last year that he was going to either be broke by Christmas or have a wild success. He's neither broke nor has a wild success. But even when you look at the best models of Goldman Sachs and some of the other analysts out on the street that went through this yesterday and reported it, the most aggressive model that they have says that this company is worth about $91 a share in about 5 years. So the question is, do they have a battery or an energy source that will hold the energy that's equivalent of, let's say, 18 gallons of gas, even 16 gallons of gas? And will they be the only car company to have it? The answer is, unless someone wants to call in and tell me why, is probably no. And that will always be the Achilles heel of this company. And, of course, there's been a lot of electric car companies over the years. Maybe all these electric car companies go the way of the dodo, but it is not going to be the car technology. It's not going to be a new form of an electric motor. It is going to be a source that can hold enough electricity and dole it out in enough of an amount to get probably 400 miles. And we still don't have that, although wild claims for Tesla came awful close before the car actually came out. The reality was much lower. We will be back in just a minute. Give me a call, 877-927-6648.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And during the break in the den, I had a question of whether or not I'm a glass is always half empty or half full kind of guy. Maybe it's my engineering background, but I tend to think of me as bring me the right size glass kind of guy. Why would you bring out a glass that's half full? Just bring me a smaller glass. Then it looks like it's full. I'm kind of an optimistic guy. I'm rationally optimistic. I am somewhat upset when we see things like this. It's so egregious, and maybe it's because I was through the .com bubble where it was so ridiculously easy to see that the stocks would never hold up. And of course, 95% of them, of those IPOs between 1999 and 2001 ended up being worthless. There was no business plan. They broke all the rules of business, and everybody said this time is different. And if there's one thing that I think you can learn in the stock market is that exactly what Sir John Templeton, I don't know why he got a sir, but maybe someone sirred him somewhere, Sir John Templeton got, and that was that the four most dangerous words in trading are it's different this time, because as you go through history, you have not found out that it's different this time. Probably the only difference is we have a market that has somewhat lost its supply and demand curve because of byproducts of quantitative easing. The question is whether or not you can actually add something to a market that doesn't eventually one day come back out of it. And until we get real and sustainable job growth, it is going to be problematic. I'd be the one that would be the happiest if we grew out of this sluggish economy. But I am living in Tampa. There are now 3 more houses within a block of me that are sitting empty. I know one got foreclosed on in April. We'll look at some other ones, but that whole cycle is still going on down here in Florida, and maybe that lands some bearishness that I wouldn't have if I was in the boom town of downtown San Francisco or back where we've seen so many boom-bust failures in Miami, especially in the condo market of South Beach and the downtown area. But we are looking at it. Anyway, we've got a market out here that is decided to go flat just about every afternoon at this time. 2.275 billion shares as we speak, coming into the bottom of the hour. But it is interesting. I continue to be watching several stocks out here. The one that I put in my newsletter as the most important stock I suspect for traders to be watching today was IBM. And why is that? Because we have significant lows out here, and they have been touched today. Don't touch me there. Oh, you won't quit touching me. Well, this 184.78 low from November 15th in IBM at 184.78, 4.4 million shares. Oh, really needed to probably get into that, or I would have liked to see market get into it. We have the high volume low. This thing was chasing April 22nd. It is at 187.68 with a 9.8 million shares, 188.41 at 10 million shares. We have kind of a light day so far at 3 million shares. The question would be has IBM made some level of a bottom here? And the question is going to be kind of tough. I don't see a lot of blowback yet today. We do at least have one test of one low. There really doesn't seem like anybody jumping in here to really salvage this thing, but we'll watch in the next few days. But I'm really saying, okay, we've got 10 million as the biggest high-volume low out here. Do we have a bottom in IBM, or is this an ABC down? And right now I can say that there's not a ringing endorsement for this thing going higher. The reason I think it's so important is we're starting to see these big cap stocks look weaker and weaker and fail on at least on the going higher. This one, we'll watch the end of the day and maybe tomorrow and see whether or not we get more volume. But the other one is AAEL, which is Apple, which is looking like that 465 high is pretty much in. We'll talk about that when we come back. Give me a call, 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we were talking about what the options are telling us for expiration a week from Friday. I've got a chart up if you're watching in the den or on Tiger TV. Hopefully you can see it. But basically, it is where the bets are placed now. On Wednesday, yesterday, and sometimes Tuesday, option market makers do a thing called going delta neutral. They sell arms to both sides so that they pretty much lock in their profits or losses for the rest. It gets too volatile for them to take chances. So when they get down to these last few days, they either buy or sell a combination of puts, calls, and or the equities underlying them to make sure that they pretty much have their profit locked in for the rest of expiration. That pretty much tells you where they think that the market could expire. What we see is that the SPYs are showing a expiration price around 167 and 166.50, something like that, and 30 points lower, probably not a big deal. I suspect that that is probably a fairly good projection so far, even though we are knocking on the door of 1,700 on the S&P cash. Not a lot of news coming out. Pretty much the earnings are all but over, and probably going to have nothing but talks of pulling back a little of that quantitative easing heroin, morphine IV drip that's been dropping into the market for a while. What is probably more interesting to me is what the September put calls look like in the SPYs. They take us down to 162 and change. Normally, pretty good setup for option market makers believing that at least they are pushing for more downside surprises than upside surprises. So not 100% accurate, but 85% of the time, all options go unexpired. It's that other 15% where you can get 20 or 30 or 40 to 1 return when everything moves extremely quickly in the market. We do have a market that has a very low VIX. It almost never stays low for as long as it has. I believe there's a organic reason that the Fed wants the VIX to stay low, and that is to continue to allow these big funds to hold lots of shares. The risk at value model that most of these hedge funds and larger broker-dealers are working on allows them to hold higher and higher margins as long as the implied volatility is lower. If we started seeing a market where the VIX was back up into the 30, 40 range, we would see that even if the market was just kind of battering up and down, we would still see these big hedge funds have to really push out a lot of shares into the marketplace just to stay under their model that was kind of pretty much forced on them by the whole Dodd-Frank thing. So we've got these risk models that could be a reverse feedback mechanism into the market. As the VIX climbs, the more that people would have to sell, not because the stocks are going down per se, but as much as the VIX is going up. And as that VIX goes up, the value at risk goes up, and the less you can leverage into the marketplace. I would not say that this is a great model to go forward with. And, of course, if you read any of Nassim Taleb's book, especially about his latest one about fragility, he would say that this is like giving a drunk bus driver a brand new bus and a bottle of alcohol. Well, we haven't had much. We saw that what happened last time, but here's another bottle, some keys, and there's a brand new bus for you. It looks to me, at least, he's been fairly right long term. And if you're investing, that's what you're interested in. Of course, we had a nice move in gold out here, and mostly what a lot of people are talking about in the den and on TV. We've had some other stocks moving fairly strongly. One of them was Microsoft. Not exactly sure what is in Microsoft here today, but I wanted to talk about Apple during the break. We'll get to Apple and then Microsoft itself. We had a pretty good sign in Apple going after this 465.75 high on May 7th. We've got 471. And, the volume came out at 11 million shares, 6 million light of the previous high, and so we've been kind of pulling back into this lower range. There is a nice gap out here, probably, at the high about 436, something like that. I could see the stock pulling back maybe a little bit into expiration, although I haven't looked at the options on this yet. I'll probably look at them tonight. And see if there's anything more to be actually brought up by them. But energy was fairly light. I think we can probably say this thing is in the longer consolidation range. But maybe it pulls back to that 430 range, 435 range, setting an ABC up to actually break higher. We talked about how the real nice place to short Apple, if you think that it is going to fail, is probably more at 507 to 514. We've got some other ones out here that are very interesting after they've been pushed so hard before earnings and actually very spotty earnings. Stocks like Amazon. Amazon is down $1.40 today. It has come off that 313 high and pulled back. Not a lot of volume out here. We've been speculating on this show that it was headed back for this gap. That gap was the earnings day gap on 7-11 and into 7-12. Volume really didn't pick up. You had one real big move. Maybe that was I think that was the earnings date was actually the 26th. of July out here. But it's been pretty much rolling over since then. You've got that little gap. Volume is going to be lighter, at least when we look at it now. And I bet if I look at the options, they probably say that this thing is a lock somewhere at $300. So probably don't have a lot of movement in this one either as we come into expiration. Let's take a look at a few other stocks real quick. See if there's much out here that is moving today. Some of the stocks that I'm watching fairly closely besides IBM is Yum Brands. Of course, especially the lower-ended retailers of food can tell you just how stressed the least wealthy among us are doing, and whether or not even the middle class is deciding whether to eat at Fridays and Applebee's, or they're going to the local burger joint. Yum Brands, YUM, came and tested the November 29th high at $74.75 with 3 million shares, got into it with 2.5 million shares, you can probably say this last move up wasn't very light, but of course all summertime moves for the most part tend to be light. You still have this just enormous gap between 64 and 66.50 that looked like it could be tested fairly easily. That gap came up with a little over 10 million shares. So you had the good buy point back here at 67.06, which is the June 24th low, taking us all the way up. You could, on the most conservative route, also say that the June 10th high that had 5.6 million shares is the volume you should be using also. But either one, your 500,000 light being the most aggressive, and your 50% the volume using and being the most conservative, that this thing goes higher out here. So I'd probably $74 back to 67, probably a nice trading range in a lot of these. Other stocks of interest is Intel. This one had been pushed down fairly strong. We're watching this actually go under its last major low today, and whether or not it can close below 22.64 is going to be interesting. What do we have for Intel right now? 22.55. So this thing is still a dime under the June 10th low. You had 50 million shares that day. Of course, we're in the 23, 24 million shares. So we're in that with about half of the volume so far. So we're going to be watching this close very carefully. But some of these stocks look at least like they may have made a short or medium term bottom, at least on these high volume, testing these high volume lows. Of course, you could almost make a case that these two high volume days out here from the 25th and 26th of last month that had 110 million shares mean something. We've gone back and we've gone through that to the previous low, so I'm going to discount those and basically say we are looking at a close above or below 22.64 as significant. I've always thought that we had one good chance of getting back into this congestion zone that started on March 7th and went pretty much through to April 18th, where this thing finally started breaking out and into new highs. So not too bad. You've got a nice high out here on the June 4th high, so probably a nice trading range set up. Just would like maybe back into the $22, $21.50 range before I think this thing is done going down, even though it is pulling back with lighter volume. Still out of favor and not a lot of juice in the marketplace to turn a lot of these tech stocks around maybe before September. Other stocks of interest. TIF, which is Tiffany and Company. This thing is banging away at its highs. Let's take a look. Is this thing coming out with earnings soon? August 26th. So we're into this month. August 27th, excuse me. So we are looking at earnings coming up here this month. But so far, a test of the previous high on very light volume, but we are hanging out at these highs. The May 28th high was 81.25, 4 million shares. When we come back and look at this, the highest volume to $81.77 was 1.4 million shares. So very light volume, of course, 400 and some odd thousand today. So we are hanging out at these highs. But we've seen a lot of these stocks hang out at highs all the way to earnings before they blew up. But certainly not a lot of people wanting to get real brave out here before earnings on a lot of these things. So it will be interesting. Again, got plenty of time. You can give me a call at 877-927-6648. That's 877-927-6648. You can also email me at PATH, and we'll PATH at TFNN.com, and be looking at it. Okay. So we have a question of EUO. Hang on, let me see if I can't. I got to move stuff around here on my desktop a little bit. I had a question about EUO. And, we are still, we're down here. Is that really, what's the volume out here? Almost nothing. You had a little bit better, to 741,000. I'll wait to see what we have today at the close. See if we have anything. EUO. Let me just get a quick quote out here. Okay. EUO. Okay, 1.1 million shares. We are a little higher than that, and breaking that previous 1817 low. You'd want this thing to close above 1817, and could be what we have now. For you, we're a penny below it. I just don't see any energy in the late part of the day to really push this thing down any further. It's down 14 cents. I'd at least be holding it in probably till Monday now. EUO is the ProShares Ultra Short Euro. We looked at IBM. We looked at Intel, VGZ, which is Vista Gold. Now, we had a pretty good low in this thing. This is kind of what I like to see. You get the automatic rally in Vista Gold out here at VGZ at 72 cents. You have basically 710,000 shares. You get into it, you break it by 2 cents on August 6th. You have it close back above it yesterday. That would have been your buy signal. So probably a lot of these gold stocks not doing too bad. The other thing is, if you're watching, is the Power Law Vector Indicator numbers, and this is exactly what I'm looking for at these lows. And we'll talk about this in the last segment of the show.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tomo O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, we're going to go right on to Don in Denver. Don, I hope your ears aren't bleeding like mine are right now.
You're, David, that's nice, but you put your emphasis on the wrong syllable. It's Ron.
Oh, okay.
No, I just want to let you know I subscribed to your letter, and I've bought that, your Molly Corp and so forth, and I still own it. But I had called you about the Amazon deal, and you told me to wait, and you were right again. So you make money with your letters, you make money by listening to you, and I want to compliment you very much.
Well, thank you. Do you? What do you besides Molly Corp right now? Is there anything else you're looking at?
Well, I sold my puts my calls on Freeport Mac, and I bought puts on Amazon today.
That's good. I don't know if you're going to probably get. Which month did you go out on Amazon?
September.
I don't think you're going to get a lot probably between now and then. It looks like at least the option market makers are betting that it expires at $300 a week from Friday, but maybe you'll get something out of it. I don't. Okay. Go ahead.
Well, we'll see. Okay, I didn't know that.
As long as you're going out that far, probably not a bad deal. and it is one of the weaker ones. I'm seeing all these big stocks look like they've got weakness, and we certainly see that the option market makers believe that at least the bigger ones out here, at least in the SPYs, are betting on at least 30 points lower in the S&P for next Friday, a week from tomorrow. So not bad.
I appreciate hearing that about option expiration. I never knew that.
Yep.
I mean, their prices. That's amazing.
Yep. Well, if you Google Delta Neutral in Wikipedia, you'll find a huge long explanation of what they do yesterday, which some people call Wall and Chuck Wednesday, because he's the first guy to really start talking about it publicly. But it is interesting, and glad to see that you are making some money. Any other stocks that are of interest?
Well, obviously, we're all watching gold, GLD, and what is it, GTX?
Yep. So it'd be interesting. Of course, we've got a gentleman after me that's been stalking me. He follows me on Tuesdays and Thursdays. That's Andy Heck. I think I got pretty close to the low on gold at 1275. Now we're going to have to see where Andy tells us where it's going to go after the show today. But I'm still thinking that we've got gold probably in a little higher trading range. I'd still love this thing to get back to $1,200 so I could buy it long term. But it could be a nice move out here for a while. I'm just thinking that when I buy it again, it's probably going to be the last time in my life I'm going to buy it. So I'm hoping for the cheapest price possible, because this will probably be the last run of my life. Go ahead.
Well, I bought something on the Handy Hex, and he said that he thought oil will go down to 100. I bought the USO about a week and a half ago when it was about 108.
Well, I tell you what,
I bought the puts. I bought the puts on USO, so I'm hoping oil will go to 100.
Well, I had in my daily newsletter just about every single energy ETF had made great signals at 50% tests of previous highs at the highs. Of the highs. So certainly all the ETFs out there are saying that energy made a short-term high. I want to thank you for the call, Ron. We will be back tomorrow in studio. Same bat channel, same bat time, and I'll be with you for a whole hour tomorrow at 4 o'clock talking technology.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.